Good morning and welcome to Sarah's Opening Bell. We're quickly approaching the final days of 2024's presidential election, so it's only right that we discuss how presidential elections can impact the US stock markets. Now, before an election, people often feel uncertain about what will happen. Investors might worry about who will win and what that could mean for taxes, regulations, and spending. Now, after an election, once a winner is announced, things can change quickly. If the new president's policies are seen as good for businesses, the stock market might go up as investors feel more confident. Now, although both stock market game and retail investors may be inclined to closely monitor election results for their potential effect on stock market performance and ultimately their portfolios, it's important to recognize that other factors may have an even greater impact. Historical data suggests that economic and inflation trends, more so than election outcomes, tend to have a stronger, more consistent relationship with market returns than major elections. Market moves are more likely to be driven by corporate earnings, interest rates, and other economic factors. So, can an election year impact investment outcomes? Perhaps. Decisions made by the new president can influence everything from job growth to how much businesses earn, which in turn affects stock prices. But financial experts say you shouldn't focus too much on the election when investing. While political news can cause small changes in the market, in the long run, the success of stocks and other securities is more about the economy than politics. And you may yield better results focusing on economic fundamentals, such as the stage of the US business cycle, the level and direction of interest rates, the job market, and business activity. But no matter what people think about the election, we're likely to see surprising news and a lot of emotions. It can be tempting to invest your money based on how you feel about the election results, whether you're feeling hopeful or worried. But usually, the stock market doesn't react strongly to elections. So, trying to change your investment plans based on what you think will happen after the election may not work in your favor. So instead of trying to guess what will happen with politics or the market in the short term, stock market game investors, and once you're a retail investor, you should probably remember to create a solid long-term financial plan that fits your needs and then stick to it. So it's time to engage your stock market game portfolio and evaluate your current holdings because markets are now open.